Hello and welcome into the KE Report. Shad and Corey here as your host, and today we're talking with our friend Sean Brodrick. Sean's the editor of Wealth Megatrends, and he's also a contributing analyst to Weiss Ratings Daily. And it's always great to have you on the show, Sean, just to cover a range of markets. I think we should kick it off, though, with the precious metals because kicking off the month of June yesterday on Monday was a banger of a day for the gold and silver stocks. We saw stuff across the board moving, whether it's the senior companies, the mid tiers, developers, the juniors, even the explorers. Everybody got a bid. So it's nice to see. And I'm just curious how you're managing your portfolio as far as your gold and silver stocks. And are you advising your subscribers to keep buying here into the dips, or how are you positioned in the precious metals equities?
Well, I am telling people to actually buy into the dips. It's just that we don't see much of a dip. I mean, you can have a dip in the morning and it's gone in the afternoon. Last week, we took some nice gold gains on a stock that was lagging other gold stocks. I mean, it was up, but it wasn't up nearly as much as others. So I thought it was time to rotate out of that because I have a lot of stuff that I would like to buy on a dip. It's just when is that dip going to be? I mean, we saw gold hit its highest level in I think more than 3 weeks on Monday, right? And silver, if you look at a silver chart, the setup there is extraordinary. And I'm so glad that I have silver positions. They did particularly well on Monday, particularly well. And I think that's where we could see the next big price explosion because there's so few of them. I mean, I think that we could see that in silver.
Yeah, I find like we've already seen some of the silver stocks start to play catch up to these gold stocks. But just in terms of the moves yesterday, one thing I was really encouraged with, Sean, was the move in the majors, because what was happening over the last few weeks was the juniors were starting to play catch up to the majors. And the majors, I felt like had gone a little bit boring. They were channeling sideways. But yesterday, holy, we saw 5+% moves in some of the largest gold mining companies, which to me, I think we need to keep seeing because it shows that more money's coming into the sector. As we see the juniors catch up, that's usually a rotation trade of people already in the majors moving down to the juniors. What's your thought on how you want to see these stocks perform when you balance out major movements compared to the juniors, which, again, the juniors have lagged the majors broadly?
Right. Well, personally, I'm glad to see stocks like Barrick and Newmont explode higher. We are long Newmont in the Wealth Megatrends portfolio, so absolutely fine with that. Kind of wish we owned Barrick after the move yesterday, but that's fine. But what I'm starting to do as I sell stocks, take gains, I'm starting to move down the scale because I think that, as you mentioned, the time of the junior miners is coming. And so I'm adding junior miners, that is those stocks that just have one or two projects, maybe three, or else they are bringing one into production like soon. Glad to add those right now because they definitely are moving. And in my personal portfolio, I'm adding some developers that have projects 2 or 3 years out because, first of all, I think that the gold bull market is going to last that long anyway. And also, I think that's where we're going to see a lot of the excitement in this market. There are gold developers trading at zero point 0.3 net asset value. That's just criminally cheap, and so if you're looking for real value, that might be where you have to look. Now, if you're looking for a cash flow machine, which is a very different thing, then you want to look at, the larger stocks because they, man, they are making money hand over fist and they're buying back shares and they're paying down debt and they're doing the smart things, making smart acquisitions. We're seeing that too. But I don't see a bad place to invest in the precious metal space per se. There are individual stocks I wouldn't buy, but up and down, I think it all looks good at this point.
Well, Sean, you bring up an interesting point about how cashed up the larger producers are, whether they're the seniors or even some of the mid tiers. They're making so much money that I would still anticipate more M&A than we're actually seeing. We always mention there's been a lot the last year or so, and there has. But with these prices, I would think we would be seeing like a deal a week or a couple of deals a week, and we're just still not seeing a lot of it. Now, when you talk about getting into some of those developers and their metrics going at zero point 0.3 to NAV, a lot of them should be closer to zero point 0.6 to zero point 0.7, so you could get a double on those. Are you also playing them for the takeover, that a larger producer could come in and buy them out, or are you just playing it for the revaluation?
actually, my primary reason for buying them is I think they'll be taken out. you know, because we've seen this happen before, and this is exactly the time when we would see some larger gold producer that has more money than it knows what to do with lock in some future production. So, yes, I think we are going to see takeovers of these junior developers. That's why I'm sticking them in like my portfolio. I might have to wait longer for them to actually make it up to like 0.7 times NAV, but not if not if a buyout comes along, which is what I'm thinking could happen. So, I mean, there's no way to predict these things. You know that. But I have to say it raises the likelihood that these things will be taken out, that they're so darn cheap.
Sean, what do you consider a developer? I've been asking a lot of people this because right now there are so many companies with resources and a lot of companies, even with early on economics, like a PEA, but they're still a long way off from technically building any asset. So, can you give us some examples of the developers you like, or what a certain stage in terms of economic study, in terms of fundamental for the individual company is that makes it a more interesting development stage play for you?
Well, for example, just to tell you what's in my own personal portfolio, because these subscribers might get mad if I actually told you about, what the others have. But one I have is Osisko Development. That has the Caribou Gold Project in British Columbia. It's now that one is like has all its permits. It has its feasibility study, and I don't have it in front of me. I think it's going into production sometime next year. Well, I mean, full scale production. I think it starts test production later this year. So that's what I would consider a developer. Now, if you want to look for something that's 3 years out, something like that, I do have stocks like that, but I'm still adding to them, so I'd rather not talk about them. But just look at the fundamentals on a stock like Osisko, a development corp. Right now, it's trading roughly 0.25 to 0.3 times its net asset value, which, I can see that easily doubling as someone comes along and says, you know what, we'll just pick that thing up and we'll add that into our future stream. And so that's a perfect example of like what I'm looking at.
Well, thanks for sharing that, Sean. That is a good case study just to give people the idea of what a developer is, what could happen, and yeah, it could get scooped up for the double, or it could just re-rate higher as the gold price moves higher. Now, you've been a proponent of much higher gold prices. If we look a couple of years out, I think you've got a target up over $6,000, if I remember correctly, Sean. And I want you to maybe unpack the macro fundamentals that you think will get us there. Is it the US dollar? Is it interest rates? Is it global trade? What do you think drives the gold price from the 3,000s to maybe double in price over the next few years?
Right. So my actual target is $6,900. If you want to be exact using the math, I get 6,902, but no one cares about $2. Anyway, so what I think is going to drive that is I expect the US dollar to devalue because Washington, D.C. has no interest really in controlling our deficit. And at the same time, we are alienating our friends and engaging in a trade war with the world. And so I don't know if you saw the latest U.S. imports and exports for the ISM, but that's really going down to like multi-year lows. And what that means is we aren't shipping as much overseas because of the whole tariffs and stuff. But more importantly, other companies in other countries aren't shipping us as much stuff because they can't figure out the stupid tariffs either. And if you're selling less stuff to the US, you need fewer US dollars. You just don't need that many. And so that weighs on it as well. And then you have Japan, which is another thing. People might say, why? Because the Japanese are buying gold. Well, they might be, but one thing we know they're doing is they're rotating out of U.S. treasuries. They're rotating out of U.S. treasuries because they can get higher yields at home, and also because their stocks look better than U.S. stocks for various reasons. And we could get into a long, detailed discussion about U.S. exceptionalism and what that means for the stock market. But for a number of reasons, U.S. stocks are less attractive than they have been in a long time. Foreign stocks are looking better comparatively, and foreign bonds also look better comparatively. And so what I've done in my personal portfolio, and I've also been doing this for my subscribers, is I'm picking up more foreign investments. I think it's the smart thing to do. Now, I just saw some recent research saying, for example, European stocks are overvalued as a group. That may be. And perhaps, because I only saw the headline, perhaps that person is like looking at historically what we consider them to be fairly valued. But if the underlying game has changed, and if, say, Europe, which has much less debt than we do, is investing more money into boosting its economy, and at the same time Asia is boosting its economy, those places look better to investments than the United States does. And even if Europe is overvalued, as I said, I haven't looked at the story, but just been way too busy today. But there are always pockets of value in there. One thing that looks really good to me is defense stocks. We've been doing well with European and US defense stocks. That's another topic we can talk about. I'm sorry, I've been blabbing on so long, I actually forget how this question started. My whole point is there's a lot of things that are actually weighing on the US dollar and pushing up gold, and these things are really starting to come into focus right now.
Yeah, I think you answered it there, Sean. It was all about what would continue to drive gold up to that 7,000 target, which I find to be an interesting target because you look back at history, some of those historic runs in gold, they have averaged around a 7x. And about 10 years ago, gold was right around $1,000. So that ties into some of those historical moves. Let's talk about those defense stocks then, because look, the European defense play, I get that because of the fact that it seems like Europe needs to spend more on defense because the US looks like they're backing away from helping out Europe as much, and also all the other kind of global agreements of the US simply funding a lot of that defense spending. What do you like in the US though? What has your eye in terms of US defense stocks?
Okay, well, I will get to that. I just want to say that all those European defense companies should be sending thank you notes to Donald Trump because he kicked the Europeans in the ass and got them to spend on their own defense. And of course, they're going to spend on their own defense companies. So, I mean, that is a huge move. It's a huge change in attitude over there. And so, yeah, it's doing very well for our European defense stocks. In the US, I like drone stocks, so those are kind of overpriced now. But what I really like is anti-drone technology, a lot of which is being done by large companies that won't really notice it, but there are some that aren't so big. And so the chance for them to leverage those gains is actually quite large. Now, as most of your listeners will know, because they are smart people and they follow the news, on June 1st, Ukraine launched Operation Spiderweb. And at 4 Russian air bases deep inside Russia, they hit them with swarms of drones that took out about 38% of the planes that Russia uses to launch cruise missiles into Ukraine. They did this by putting the drones inside specially made wooden containers with flip-up roofs. And they somehow got these into Russia and hired Russian truck drivers to transport these boxes near the bases that they wanted to attack. And then the roofs flipped up and the drones took off and they went and they blew up the planes. And then just to, put an extra explosion at the end of it, the big wooden containers themselves blew up. So you're just letting everyone know what you've done. So that, though, I mean, it's an absolute stunning defeat for the Russians and a stunning victory for Ukraine, but that puts every military in the world on notice that your big assets aren't safe because anyone could sneak in a drone swarm in a truck near your big assets, whether it's an air base, whether it's a ship, whether it's anything really, and just take them out. So the thing to invest in now, I believe, and there are many things to invest in, but I really like how counter drone technology looks right now because the militaries of the world have not invested nearly enough in it. And most of the stuff they have is stupid expensive. I mean, if you need to use $1 million missile to take down a $10,000 drone, that's almost counterproductive. So what they're rapidly investing in now is these companies that are promising they can take down drones for much lower cost. And so that's going to revolutionize the whole counter drone thing. So we'll be going from really expensive missiles blowing up really cheap drones to cheaper systems blowing up drones. And so that's the thing that I'm trying to invest in now.
Yeah, Sean, it's a wild world out there where it used to be people fighting people, then it was technology involved, then it was a virus and you needed an antivirus. Now there's drones and you need an anti-drone situation. What about robotics? Does robotics tie it all into defense?
I just haven't found a good way to invest in that. I mean, there are some amazing, one might even say terrifying drone weapons being made that you might consider killer robots, by companies you can invest in, and not just flying ones either. There's like this submarine that's being built by Boeing, but being tested in Australia that is the size of a school bus. It can stay underwater for months. It can go anywhere. And because it's that small, size of a school bus underwater using stealth technology is actually very, very hard to find. This thing becomes like a terror weapon. There are a lot of submarines that are worried about those things being sent on their tail to like hunt them down and stuff. So, yeah, we are going to see more killer robots. I'm always looking for a way to invest in it. Some people might think, oh, that's horrible investing in killer robots. Look, I'm just investing in things that I think will go up. And in case I need to remind everybody, President Trump turned in the first $1 trillion defense budget. $1 trillion. How is that going to be spent? You can bet a lot of it's going to be spent on drones, robots, the things that can kill on the cheap. That's what they want. They want more bang for their buck. So, yeah, that's how we're investing there.
Yeah, that spending still in the US is kind of crazy, and it's only getting more for defense for these military contracts. Well, changing topics completely then to a whole other sector that I know you want to talk about, oil stocks. Oil has been under pressure. Earlier in April, broke down from a trading range that it had been in for a couple years, that $65 a barrel being a floor. Has yet to regain that level as we're chatting, still in the low $60 range. A lot of news that keeps coming out of the sector from OPEC Plus actually increasing their supply. It hasn't hit the market as hard as it did earlier on when they announced that just about a month ago, I believe. Sean, what do you like about the oil market here, even though it's still below that multi-year range that it traded in?
Right. Well, first of all, I like that my recent oil picks are going up. That always makes you happier. But oil, as we speak, is, and I am talking about West Texas Intermediate crude. That's the U.S. oil benchmark. That's up like nearly 2%. It's near the top of its recent range. And it almost looks like it's doing an inverse head and shoulders. If you look at the down leg from April, then the head in May, and now we're getting the other shoulder. That is amazing considering that OPEC Plus is adding another 411,000 barrels, and that's on top of increases they did the previous 2 months. And they're doing this, they say, to put pressure on countries like Kazakhstan and Iran that really overproduce their allotted caps on how much they should produce. We'll see how successful that is. We know that places like Saudi Arabia need higher oil prices in order to fund all the stuff they have going on. But the way oil is acting, someone's expecting something. I mean, we are seeing bids in it now. Part of it might be that Ukrainian drone strike. And the reason is that when Ukraine launched that strike into Russia, they proved basically they can hit anywhere inside Russia. It would beggar belief if they didn't think of Russian oil infrastructure as great targets for them to take out. Maybe people are pricing in that. Maybe they're pricing in a potential Israeli strike on Iran. There's a lot of things that could be priced in. But what I'm seeing now, honestly, considering all the bad news we're seeing, oil is behaving awfully bullishly. And with the news we've had, it should be down to 55. It's not. It's up around 63. So someone knows something, or else maybe the algos are just saying that the whole sell-off is like overdone. Maybe that's it. I don't know why. All I know is that these stocks are starting to look more appealing, especially when you consider many of them pay fat dividends. Many are trading near their book values. So how much downside is there in them anyway? So if you can find that nice trifecta of a stock that pays a dividend, is growing production, right? So that's important, and still makes money at these prices, then and you can pick that up for at or near book value. What's the real risk? There's at least 10 of them, and I could probably find more if I looked harder. So I'm speaking about the US and Canada, because you have to keep Canada in mind. I really like how they've been underpriced for years. Well, you can have an opinion whether they're underpriced or not. Let's say that they've been receiving less bang for their buck than US oil stocks, but I think that could be changing as well. So I'm also looking there. So I think there's all sorts of potential within the oil space. I'm not overpaying. I'm not especially buying things that don't pay dividends either. That kind of narrows it down. And I'm looking for stocks that are at or near book value. So if you take that and you combine it with stocks that can still make money at these prices and are growing production, those are the stocks I'm looking at.
All right, Sean, I think we'll wrap it up there for today. Those are some actually good criteria to help investors pare down the choices. There's a lot of choices in the energy sector, but if you're looking for companies that are resilient at today's prices, they're making money and paying a dividend, they've got growth on tap, that does narrow the field down some. And again, the dividends pay you to wait it out. So even if there's some fluctuations in price back and forth, you're still getting paid the dividend as you wait for better times in the oil patch. And then I appreciate you breaking down some of the defense stocks, especially the anti-drone technology, and what you're doing in the precious metal sector, especially those silver stocks starting to play catch up recently. So
They sure are.
a lot going on. And if people listening want to follow along with Sean, he writes all kinds of different pieces. So I'm going to put a link down below to the Weiss Ratings Daily site where you can look at what he's doing in Wealth Megatrends, Super Cycle Investor, or Resource Trader. Sean's a wealth of knowledge, and we definitely appreciate you investing some of your time here with us and our audience at the KE Report. Looking forward to our next conversation, Sean.
Okay, great. I also look forward to it as